Cameron, good to see you there. Yeah, the rally continued Friday night, it seemed there. What's your calls for the Aussie market open then?
Yeah, good morning, Bridie. Look, we're set to see the local market continue with further gains, carrying on its momentum from last week, with the ASX 200 called up about 20 points or 0.4% around that 44.09 level. So the first time above 4,400 since the 23rd of August. Of course, on Friday we did see the major US equities continue their momentum from the previous session, where of course Ben Bernanke announced that fresh round of asset purchases. We had the Dow finishing the week or Friday session up 53 points or 0.4%. The S&P was up 0.4%. The Nasdaq up 0.9%. We also had European markets having a very strong session. They, of course, were closed when Ben Bernanke did announce the new round of quantitative easing, so they had a little bit of catch-up to do, and again had very strong sessions. We had the FTSE, the DAX and the CAC all up between really 1.3 and 2.3%. Now, despite the stronger move higher in equities, there's already a lot of questions being asked about quantitative easing. Will it last? Will it have the impacts and the effects that the Fed hope it will? Or will it create new jobs, or will it just provide a temporary boost to equities, risk currencies and commodities? And we've already seen that play out over the last couple of sessions. We've seen a substantially weaker US dollar. On Friday, we saw the likes of copper, zinc, nickel, aluminium all up between 2 and 4%. We saw gold prices at 6-month highs, currently trading at around $17.75 an ounce. We've got oil just under $100 a barrel, and we saw iron ore prices jump more than 5% on Friday to be back above $100. So already quantitative easing having that expected impact on equities and risk currencies and commodities, but will it lead to that increase in or decrease in unemployment like many people are hoping for?
I just want to ask you, we were speaking to Noel Yates from Macquarie Private Wealth earlier, and he seemed, when I was asking him about the trend that we're seeing, and he thinks that the next 2 weeks are going to be pretty critical as to whether we're going to see this rally continue or whether we could see a pullback to perhaps that 4,200 point level on the ASX 200. What do you think? I mean, is there a sense that there's some permanency about this trend?
Yeah, look, I think that's the million-dollar question at the moment. I mean, we've seen really since Mario Draghi came out maybe 6 weeks ago now and said, we're going to do whatever it takes. That sort of sparked a little bit of a rally. We also had some very poor payrolls numbers out of the US, which sparked hopes that we would get quantitative easing from the Fed, which we now have. So we've sort of had this, people buying into this expectation of further stimulus. Now that we've got it, it's going to be very interesting to see whether the market can consolidate at these levels, or whether we do start to see people, take some money off the table ahead of the US presidential elections and the fiscal cliff issue later on this year. The one thing I will say is that the rally that we have seen in recent weeks and probably over the last 2 months really has been on very light volume. So there has been a substantial rally, but it's been very light on participation. So there is hope that some of that money sitting on the sidelines will come into this market and keep the currency or keep the equity markets fairly buoyant. So I'd be very surprised if we pulled back to 4,200. We might have a small pullback of 3 or 4%, but I'd be very surprised if we pulled back anywhere near 4,200 based on the fundamentals we've got ahead of us now.
I just want to ask you too about the moves in currency markets. The euro, actually, it's amazing to watch. It's gone above $1.30 again, US, and then back below it. But what do you see the short-term moves for the euro being like? And I mean, how much pressure is that going to put on the already struggling eurozone, which is in recession?
Yeah, look, I think, probably for the bulk of this year, you've had some massive short euro positions. People were always positioning themselves for the demise of euro and the next negative headline out of Europe. But, we have had, as I said, Mario Draghi come out saying we're going to do whatever it takes. We seem to have a little bit more stability in Europe at the moment. We've got these contingency plans and these bailout plans now a lot more firmly in place. And I think over the last, 3 or 4 weeks, we have seen a gradual short covering of euro positions. Now that you've got the US again printing more money, I think that's going to put further downwards pressure on the US dollar. So I'd expect the euro to probably hold that 130 level in the short term and possibly move a little bit higher if we do have that sort of risk-on rally continuing on into the end of the year.
All right, Cam, great to get your thoughts as always. Thanks so much.
Thanks, Bridie.
Cam Peacock there from